Welcome back, ladies and gentlemen. So in this video, we're briefly going to discuss the different types of audit reports and opinions. Now remember, the absolute final task in an audit is to evaluate all the evidence and the testing results to determine the final audit opinion. That is the conclusion that we have reached as a result of all the activities that we have performed. Now, this opinion is presented within an audit report. So essentially, that's the connection between opinions and reports. The opinion is within a paragraph located within the audit report. Now, we have two different types of audit reports, and there are a few different opinions that can be used within each. So let's talk about that. Before we do, just remember that the audit must be conducted in accordance with the Australian auditing standards, which are the ASAs, and the Australian accounting standards, which are the AASBs. Remember, those are the criteria that we use when we evaluate the financial report. Now, the other thing to mention is that the auditor indeed has an obligation to express an opinion, their conclusion, with respect to whether the financial report is free from material misstatements and whether it has been prepared in all material respects in accordance with the applicable financial reporting framework. Now, we're going to be talking about these concepts a bit more in class, but for now, I just want you to start to understand what these concepts mean. So material misstatement, it's talking about issues within the financial report and whether they are indeed significant. That's what the term material means. When it says here in accordance with the applicable financial reporting framework, ladies and gentlemen, that's the accounting standards. So that is the criteria that's used, that's the framework that we compare the information against to make sure it is indeed true and fair. So the first type of audit report we will talk about is the type 1, the unmodified audit report. Now, this is covered by ASA 700, and for now, probably the best way for me to explain this one to you is with a smiley face. The unmodified audit report essentially means that we've been able to obtain reasonable assurance that the financial report was indeed free from material misstatements and therefore was indeed true and fair. So we've been able to tick off on the fact that we were able to collect sufficient appropriate evidence. Any uncorrected issues were immaterial, so not significant, or they were corrected. And overall, the financial report has indeed been prepared in accordance with the accounting standards and the framework that was used as the criteria. So tick, tick, tick. Essentially, we are happy in this certain situation that the financial report was indeed true and fair. So that's our type 1. And as I said, that's our smiley face report. The second type of audit report is a modified audit report. Now, this one is covered by ASA 705, and just like last time, we can visually represent this in another emoji, but unfortunately this one is a sad face. The reason being, in situations where we provide a modified audit report, we're providing that report because we cannot conclude that the financial report is free from material misstatements, or we were unable to collect enough quality evidence to be able to conclude that the financial report is free from material misstatements. So if you compare this to the first type with the type 1, which was an unmodified report, that was our smiley face. Essentially, we were concluding that the financial report was indeed true and fair. But in this second type, this modified audit report, we are not concluding that it is indeed true and fair. So we're not concluding that because we've either found issues or we were unable to collect sufficient appropriate evidence. Now, within that report, there are a few options when it comes to the opinions that we provide. So it's qualified, disclaimer, or adverse. So we need to determine which of these opinions sits in our report. We're going to be talking about this much more in class, so I don't want to confuse you too much just yet. But what I will do is show you a table that we will be referring to, which will hopefully assist you in determining which of these opinions are appropriate. So this is the table I was referring to. Now, in order to determine which opinion is appropriate within our modified audit report, and remember the options are either qualified, adverse, or disclaimer, we will use this table to actually assist us in making that call. Now, again, I will be brief here, but there are two questions that we would ask in order to determine which opinion is appropriate. The first question is over here on the left, and that is the question being, well, what's the reason why we had to modify this opinion? What was the main reason why we couldn't say that the information was true and fair or not? Was it because the financial report is materially misstated? Is it because we have found issues? Or is it because we were for some reason unable to obtain evidence? Right? Now, once you've asked that question, then you can move on to the second question. And the second question is, okay, so now I know the problem, how severe was it? And this is when you have this new term called pervasive. Pervasive or not pervasive. One thing I would like you all to make sure you note down for now is the term pervasive. A good way of thinking about it is widespread. Was the problem widespread? Was it in many different areas, or was it not widespread? Or was it contained within a certain account or a certain area? If you have a situation where we found issues, which means you're sitting here, found issues, but the issues were only in a single account, then that's not widespread. That's why you would give a qualified opinion. So issue, not pervasive, not widespread, it's actually just contained, then you would give a qualified opinion. In another situation, if you were unable to obtain any audit evidence, so say for example the client's buildings caught on fire and all the documents were destroyed regarding everything that the business does, then the issue would be, well, we were unable to obtain evidence. And when it comes to, well, was it widespread or not? Did it affect many accounts or just a couple? In that situation, if all the documentation was destroyed, then that would be deemed to be pervasive. So in that case, we would be sitting in this box and in this top box, which would lead us into the bottom right option, which is a disclaimer of opinion. We will talk about this more in class, but I just wanted to give you a brief introduction to these different opinions here. I hope you found that helpful, and I hope you have a somewhat of an understanding of the different types of audit opinions and reports, and we will definitely talk more about this in class. Have a great day and see you there.